I'm Michael Sabo, Senior Commodities Broker with RJO Futures, coming to you here from the floor of the CME Group with some commentary here in the energy markets. And again, we're gonna focus here on the oil market, August crude oil. Let's talk about the EIA data inventory here that we just recently saw come out. You know, most traders they were looking for a draw come in around 1.5 to 2 million barrels, and actually came in with a slight build of about 18,000 barrels. So once again, take a look at that supply side on the oil. Market appears to be ample supplies out there. If you look at where the year-over-year stockpiles are at right now, we're at the highest level we've been since about 1990. So again, it looks like we've got a lot of oil out there in the marketplace. Refinery capacity utilization is up slightly. We increased from around 89.3 up to just over 90. We're right around 90.2%. So we did see a little bit of an increase there, seeing a little bit more demand coming in. But if you take a look at the charts there, look at how we saw oil prices slam down there last week. We've seen it slightly creep up so far this week, and we're starting to consolidate here, and we're in some what I would consider to be a little bit of neutral territory. Short-term technical indicators are telling me that we're basically neutral right now in the energy market, but if you look at some of the price action there, it kind of looks like we're going to start rounding over. I personally believe that the market still has more downside action. We're trading around 95.50, 200-day moving average around 94.75, but we did dip through that, and it looks to me like we're going to be targeting down around that 90 area. You do have the dollar here that has started to bounce back up again, as you've seen, continues to get weak data out of China. We've seen, some mixed data, but mostly weaker here in the U.S. recently. Look at the GDP number, take that for example. And then if you take a look and you shift yourself over to Europe, ECB is basically committing to continuing with their easy monetary policy. And that tells me that there's still a lot of problems over there. And with that, if we keep seeing these problems develop, I think what that's going to translate into is, again, sluggish demand for oil. And when you couple the sluggish demand for oil with the supply side, to me, I think that indicates weaker prices. S&P has rallied up here just a little bit, but I don't think that that's going to be enough to keep dragging that oil up. So, and I think what you want to do, most traders, I think you should be looking at the short side of that market. Be cautious, though, if we see things continue, with some news in Syria start to drag itself in, could heat things up a little bit. Need some ideas or something, give me a call. Again, I'm Michael Sabo with RJO Futures. And of course, remember that futures trading does involve a substantial amount of risk and may not be suitable for all traders. Good luck and good trading.